Contracts for difference, or CFDs, were developed to manage investment risk, but can also be used to accelerate your investment performance. CFDs are leveraged products, which means they carry a higher level of risk to your capital than normal stock market investments, say traditional share dealing. CFDs let you speculate on share price movements without actually buying the share. Essentially, it's an agreement between an investor and a provider to exchange the difference between the opening and closing price of the contract. So, if you think the price of a share will rise in value, you buy or go long on that share. If the share increases, you'll receive the value of that gain, but if the share price decreases in value, you'll make a loss. CFDs give you access to trade a wide range of global financial markets not normally available to retail investors, such as commodities, agriculture, energy, metals, for example, silver and gold. You can also trade in foreign exchange sectors, indices and equities, to name just a few. While CFD trading isn't for everyone, for those who understand the risks and are comfortable investing, there are a number of advantages. Hedging, cash extraction, speculation, short selling, tax advantages. With this type of investment, you're predicting how the market, a share or commodity will perform. You're speculating on whether a price will go up or down. If your prediction's right, you can make a profit even if the market's falling. Since you're not buying the share, you don't pay stamp duty, but of course tax laws can change. Remember, you do have to pay capital gains tax on any profit you make. Financial markets fluctuate throughout the day. These price movements are determined by supply and demand. At times, these movements can be exaggerated due to uncertainty within the markets, which in turn creates a higher potential risk for CFDs. With CFD trading, there's a risk you could potentially lose more than your initial investment, so you should only invest what you can afford to lose. However, you can hold a fixed risk account where any loss would be limited to the funds in that account. Find out more about CFDs by visiting the learning and research pages on natweststockbrokers.com.